In the meantime, regional Fed officials out recently with some comments on Fed policy. Yahoo Finance's Jen Schonberger has the details. We heard from the likes of James Bullard.
Good morning. That's right, Julie. St. Louis Fed President James Bullard says he expects the Fed to end front-loading aggressive interest rate hikes by sometime early next year, but still maintain an aggressive policy stance. Now, Bullard, who made these comments in a Bloomberg TV interview Wednesday, suggested he doesn't need to see rates pushed higher than that 4.5% to 5% range currently projected by the committee. Bullard told Bloomberg, he thinks next year the Fed will be closer to running what he calls, quote, ordinary monetary policy. He said the Fed is at the right level of policy rate to cool inflation and can adjust as the data come in. Now, these comments coming as the Fed has said it will be appropriate at some point to slow down the pace of interest rate hikes and assess what the current rate hikes impact has already had on the economy. Elsewhere, Minneapolis Fed President Neel Kashkari said that the Fed could potentially pause interest rate hikes sometime next year if inflation cools. Kashkari told Travelers Institute that he thinks inflation will level out over the next few months, but underscored he doesn't yet see evidence that core prices, which of course exclude volatile food and energy costs, are moderating. Now, these are some of the last comments from Fed officials on monetary policy before we go into that so-called blackout period ahead of the Fed's next interest rate policy meeting in less than 2 weeks. Fed officials widely expected to raise that benchmark interest rate by 75 basis points again for the fourth meeting in a row. Guys,
is there any inclination to or anything that we can extrapolate from Bullard's comments, especially as we were just talking about the housing market as well? Bullard seemed to be acknowledging at least of the equation there and what the housing market represents or does not represent. But is there a clear sense of how the Fed will continue to monitor housing, particularly even as they're going along in their policy pathway?
Well, 2 points there. Obviously, on the housing front, that is the one that has been most sensitive to the interest rate hikes and has seen the cooling. Fed officials are still waiting for those rate hikes to penetrate other sectors of the economy. So while they are seeing some progress on the housing front and other interest rate sensitive sectors, they're still waiting for that to filter through. Now, I think there was sort of an understanding from the market that perhaps the Fed could get even more hawkish on the back of an increase in core inflation on the CPI reading that we got last week, moving up to 6.6% in September from 6.3 in August. But Bullard is towing the line here, saying, look, I think that our interest rate projections are the correct policy path for right now. And that's exactly what Mary Daly told me last week as well. So perhaps that can give investors some solace that the Fed's still looking at that range of 4.5% to 5% as the peak rate on the Fed funds rate.
All right, Yahoo Finance's own Jen Schonberger. Jen, thanks so much for breaking this all down.